The start of a new year often signals a time for change, but for the Vancouver housing market, 2023 began similarly to the end of 2022, marked by a significant slowdown in sales. I'm Josh Kepke with Real Broker, and welcome to Vancouver Real Estate Today. We're bringing you the latest on the Vancouver region's housing market. In January, only 1,624 sales were recorded, which was the lowest total for the month for the past 20 years. Sales were 54% below those of January of 2022 and 42% lower than the 10-year January average. January sales were also 17% lower than December of 2022, which is a larger decline than the typical decrease between those 2 months. The lack of an expansion in inventory has really hampered the housing market. New listings in January totaled only just over 5,000, which is 22% below last year and 26% below the past 10-year average. Inventory at the end of the month was 2% less than in December and 21% less than the January long-term average. This tight supply environment continues to affect the housing market, with constrained housing supply prevailing throughout the region. Now, hopefully, with the arrival of the spring market, we'll see an increase in new listings. Potential homebuyers have some good news just a few weeks ago when the Bank of Canada indicated a halt on its rate hiking regime. But hold on a minute, because those elevated interest rates are remaining for now, and that's going to mean an increase in sales activity will likely be muted in the near term. That said, with some recent developments in the Canadian market, those forecasts from the BOC at the end of January may be less certain. Here's why. We had 150,000 jobs added to the economy in January, and that's 10 times economists' estimates. In December, those numbers were 20 times their estimates. So some are attributing this to a one-off increase in non-resident workers arriving, but regardless, investors are looking at this and interpreting it as a labor market boom, which is telling them that maybe inflation is going to be with us longer than initially expected. And now we're pricing in the markets are pricing in a 7 in 10 chance of another interest rate hike by the summer, as opposed to potential cuts we were talking about at the end of the year a few weeks ago. So enough of that. Let's get into the actual benchmark sales and benchmark prices and the sales for the Greater Vancouver region. Remember, this is for the whole region. If you want to get more specific on areas, go to vancouverrealestatetoday.blog or give me a call, email, or text, and we can get into it. Sales of detached homes in January 2023 reached 295, which is a 52.6% decrease from January of last year. The benchmark price for a detached home right now in Greater Vancouver is just over $1.8 million, and that's down 9.1% from January of last year and down 1.2% from December of last year. Sales of condos reached 571 in January of 2023, and that's a 56.6% decrease from January of last year. The benchmark price of a condo in Greater Vancouver right now is just over $720,000, and that represents a 1.1% decrease from January of last year and a 1% decrease from December of 2022. If we look at attached properties, those are townhomes, duplexes. Those are down by about 55% in sales transaction volume, right now with the benchmark price sitting at $1,020,000, and that's down 3% from January of last year and 0.8% from December of last year. Now, according to the Greater Vancouver Real Estate Board's Director of Economics and Data Analytics, the coming months, you're going to expect to see larger price declines in the media. And that's because what we've reporting up to now, it's because the prices peaked in spring of 2022. So we need to understand that these year-over-year calculations are backwards looking. The price declines have already happened, and what we're seeing today is that prices have found a footing, even if it's a bit of an awkward one that's sandwiched between low inventory and higher borrowing costs. With higher interest rates, holding power will be critical, and recent data from Stats Canada and Director of SFU's City Program, Andy Yan, shows that half of Vancouver's owner-occupied households are actually mortgage-free, and that means, and they also don't have any home equity line of credit debts on those either. So it's the investment properties that are not included in the study though, and that's where the leverage lies. Highly levered investors are going to be pushed to the brink, and that's really evidenced by the case of major Vancouver developer Cormandel, who recently filed for creditor protection. So that's it for now, Vancouver. I hope you found this update informative. Click over to Vancouver Real Estate today to find your next home, to learn something new about real estate, or to find out the value of your current home or investment. And of course, you can always give me a call, text, or email 604-313-9805 or hello@Vancouver Real Estate today. I'd be happy to give you some more information on the market. But hey, if you just want to see more of these market updates each month, some amazing tours of beautiful homes in Vancouver, and get some great educational content, what are you doing? Just subscribe. I'll catch you next time.